Your closing disclosure is the last chance to catch hidden fees before you sign. If you miss one line, you could owe thousands. Today, I'm going to show you exactly how to decode every section so you close with confidence. I'm Chris Hallam, mortgage professional of 13 years with experience. I've helped hundreds of buyers avoid last-minute surprises, and I'm going to teach you the same insider checklist I use with my own clients. The closing disclosure replaces your loan estimate once underwriting is complete. It's a legally binding document showing your final loan terms, all the fees, and the exact cash that you need at signing. So errors here cannot be fixed later. So what you'll learn: number one, how to compare your loan estimate to the closing disclosure. Number two, how to spot hidden fees. Number three, verify cash to close. Number four, ask the right questions. By the end of this video, you're going to know exactly how to compare your closing disclosure against your original loan estimate, spot any surprises, confirm your cash to close, and ask targeted questions if something doesn't look right. Section A is going to list your loan terms, the loan amount, interest rate, monthly principal and interest, and whether or not you have any prepayment penalties or balloon payments. Compare the rate and the P&I, principal and interest, right here to verify that it's similar to your loan estimate. Make sure there's no drastic changes. Also, must see no under prepayment penalty and balloon payment. If you see a yes, make sure that you bring it up and address it and make sure that you understand what that actually means. But most loans in today's current environment, you're going to see will say no. So just make sure it says no under prepayment penalty and balloon payment. If anything changed, like a higher rate or a new penalty, you need to call your loan officer immediately and get some answers. So section B, as in boy, is going to break down the loan cost into two parts. Origination charges, number one. So here's where you're going to see the lender charges. And that's what, we talked about before with the loan estimate. You're going to see things like origination, discount points, underwriting fees, things of that nature. And then you're also going to see services you cannot shop for: appraisal, credit report, flood certification. Total up parts 1 and 2 and compare to sections A and J on your loan estimate. And any unexplained increases, make sure you ask your loan officer why that's the case. Next, you have services you can shop for, like pest inspections or survey fees. Your CD shows you what you choose. Make sure you recognize each item and price. Section C then lists title insurance and settlement fees. These should match what your realtor and title company quoted. If they're higher, ask for an itemized breakdown, but they should be pretty similar. Also keep in mind, typically those fees are going to be estimated at the beginning of the process. So if they're off a little bit, a little leeway there is okay. Section D, as in dog, covers other costs you prepay at closing. So prepaid interest from funding of your first payment date, property taxes or HOA dues collected in advance, if that's applicable, homeowners insurance premiums, if you escrow your taxes and insurance, of course. Confirm that these line items match your escrow worksheet and that they haven't been inflated. Now, this is the moment of truth: cash to close. It factors in your down payment, your earnest money deposit, seller credits, and all closing costs. So here's a quick check. Earnest money credited, make sure that's there. Seller concessions deducted, make sure those are present. And then your deposit amount correct. If you see a higher number than expected, call your lender right now. Sections F and G include mandatory warnings like appraisal rights and your lender's contact info. Save these pages as a reference. They tell you where to send questions or file complaints post-closing. If you have an adjustable rate mortgage, Section 8 spells out the rate adjustment schedule. So be on the lookout for that, obviously. Most people are not an adjustable rate mortgage, but we are starting to see VA and FHA adjustable rate mortgages be priced a little bit better, so they are kind of making a comeback. Section I is going to explain whether your loan is assumable and who services it after closing. So watch out for these red flags: any rate changes, unanticipated fees, missing credits, escrow hikes. If you spot one, call your lender before the wire deadline, so like immediately. and make sure you get those answers. I see examples all the time, and especially in the first 10 years of my career, I was overseeing a team closing anywhere from 150 to 300 loan closings on a monthly basis. And I can't tell you how many times I would see clients get on the phone with us after they've been working with another lender and just tell us about nightmare stories about how things changed at closing. And so what that means is they received a loan estimate at the beginning of process, and then when they got to the closing disclosure at the end of process, all the numbers have been inflated. And so very, very important to really pay attention to the closing disclosure and make sure that if you see a big change, you catch it immediately and get those things corrected to make sure that you're not getting taken advantage of and you're not closing on something that you didn't agree to from the beginning. So here's a recap. Number 1, verify rates and principal and interest payment in Section A. Number 2, compare fees in Section B and C. Number 3, confirm prepaids in Section D. Number 4, double check cash to close in Section E. Number 5, note disclosures and contacts in F through G. And then number 6, watch adjustable terms in H through I. Now, if everything lines up, you're clear to sign. And remember, if something looks off, keep asking questions until it's crystal clear. Your loan officer should be more than happy to address any questions in a calm fashion. If they start getting defensive, that's kind of a red flag in my opinion. They should, it's a part of their job to help you understand this. So just keep that in mind. Now, comment decode for your free closing disclosure checklist. Ready to decode your own closing disclosure? Type decode in the comments for my free printable checklist. Also, don't forget to like, subscribe, and hit the notifications. Next week, we're going to dive into how to avoid missing your closing date. Sounds important. Very important. So with more pro tips, make sure to join. Thanks for watching. Here's to a smooth closing and worry-free journey. We'll see you at the next video.